you?
Happy New Year to you, Nick. Thanks for coming back. I appreciate it. I've been thinking about you, and the last interview we had, we talked about, we looked ahead. I think S&Ps were trading, I don't know, 1800, 1750. I can't even remember anymore. And you said 2014 was the year that the GAN counts that you're looking at will begin to manifest, and we're off to a different type of start in 2014. January has been a down month in the market. Looks like the market's hoping the Fed bails them out for one more bounce. What are you seeing with your work here? Is this just a pause that refreshes, Nick, or is this the high, or could there even be one more blow off after a nice correction? What's your take?
Well, there's always a chance of another move higher if these central banks all get together and they conjure something else up. But what we're seeing already is just a little movie preview of what I think we're going to really see in 2014. People in the public, at least, and a lot of traders on Wall Street have become very complacent, believing that the Fed is just going to solve this problem. The truth of the matter is, every central bank around the world has been doing the same thing, and the cycle really plays out the way I think it could. We're going to be in for much steeper declines.
When does your GAN's time cycle say that the top's in? I know there are a lot of people talking about a peak in the first quarter that could come from higher levels. What's your GAN and Elliott work telling you as far as potential dangerous months, or perhaps where it's projecting the final high to be? You don't have to give us
You
a
know,
price. How
once
about a time zone?
time zone would be sometime in the spring. Right now, though, I think there's a real good chance the highs might be in for the year already.
Right.
So, as I wrote to my subscribers, beginning in the end of December of 2013, I said this market may have topped out already. It's always a little bit difficult to know because you had such a robust 2013. So when you get these rolling tops, you will get dip buyers. The institutions will come in and try to pick up certain support levels, and that's kind of what's happening even today and this
Yeah,
week.
that 1770 level, and it's interesting. You have something up there. It looks like 1806, and I think that's right around a 50% retrace would be up there, and 1820 around 61.8 back. And if we take out the support level, you're talking about at least 80 points under the lows. That could take us what to 1690ish, 1700, right?
Yeah, well, I'm thinking the next break we'll probably go test on the S&P cash a move down to around 1650.
Okay.
You know, so that's really where I have calculated my next big support level on the S&P is going to be right around 1650.
And
And
that's
what
right
we're
around the
seeing here,
October low. And it's interesting you
yes,
bring up that number because I anchored that low as the wedge line that it broke down out of Friday. So and
well,
what
that's exactly
right,
it.
and wedges can retrace 100% of the move.
Absolutely, and this is going to be the next big spot. There's not really much doubt in my mind that we're going to test this level probably within the next 3 to 4 months.
Yeah. Okay. Test what levels again?
Well, right now the big level here in the bigger scheme is going to be around 1650.
Right. Okay, and I know that
Right now,
you thought the next crisis epicenter from our last conversation, maybe you're amazed at my memory. You thought the geography was going to be Japan.
and I still believe that. I still think that Japan is going to be the ticking time bomb already. And if you just take a look at the a chart of the dollar yen, which I'll put up right now, this was my level that I gave to my subscribers, 102 for a short-term bounce. But if this trade ends, and when this for those of you for the listeners, when this goes up, it means the yen is weakening.
Right.
When it goes down, it means the yen is strengthening. And right now, that's the most leveraged trade out there, and that's partially what's fueling the S&P trade. So if this starts to move
They're
lower,
joined at the
this is
hip.
dollar
Yeah,
yen.
they're joined at the hip.
Yeah, they're 100% joined at the hip,
And
and that is really the market right now.
yeah, I know a lot of people that are still bullish for 2014. They think that 108 was a target that wasn't achieved, and that they're still looking for those targets to be met. But maybe we go to 100 first and shake out even.
Yeah, well,
Go ahead.
I think this can go back down to 95. That's my big level right now. It's well, maybe 96. I take that back. Right at 96. That's going to be the big level down here. If you just take a look at a larger time frame, we'll just move this to a weekly chart.
Beautiful, Nick.
You'll see that this is where all of the you had this low, and then you had the higher low, and then another higher low, and that was the breakout point. So markets love to come back and revisit where they once were. And I'm thinking right in here is probably where this dollar yen is going to go. But that is going to cause so much disruption in a complacent market that we are in
Not
now
in the bond
when this
market. The
happens.
bonds are going to love it.
The bonds are going to love it. The bonds are going to
You
love it.
know,
But in the stock market,
I look at this pattern. I know I sound like I'm interviewing myself, but your charts and your levels get me amped up. Now that I see what could happen, I was thinking this was only the second drive to a top, and the weekly diverged dramatically at new highs. It was not a confirmed high at the end of last year with the 14 RSI on the weekly. And if we pull back to
mhm,
96, that would still allow for one more push up to above that high to get a three drive pattern to complete.
that's very
Okay,
possible.
so
Yes.
you've given me some clarity about where we go from here, Nick, on the end with your targets, and that's how we can see those targets in the S&Ps you're talking about.
Yes.
1650. We go to 96 yen. 1650 would be the market holding up pretty well with that decline.
Yeah, I pretty much think that this would be a pretty good level, 1650. I think that the S&P will get defended there, and especially if that can coincide with the dollar yen chart making its move down to around 96, which I ultimately believe should happen.
Okay, and I know last year you were bearish in gold. It was right to be bearish gold. We put in a reversal towards the end of the year when everyone was away. They cleaned out all the stops under the previous low and reversed, and we're attempting to rally off this. It looks like the opposite kind of chart as the yen. It looks almost like the inverse relationship of the yen.
It absolutely is, and when the dollar yen starts to move down, gold will start to move up. That is a perfect 100% correlation at this time, and that's something you and I can talk about, but they won't. People won't hear this on CNBC. So I am bullish gold right now. I think right now gold is setting up with a little sideways pattern. And if you take a look at my weekly chart here, this is something I gave my subscribers back in December. I said watch for a W bottom to form on the gold chart, and I'm just using the chart of the GLD because I think most people
Right.
can see that. And basically, so far it has played out. Now, if this can just base for a few weeks, I think the gold market has a real good breakout, possibly up to around the 140, maybe even a little bit higher.
Okay, so that's a little bit of a change of view from last year because weren't you looking for eventually before and that could end up being just a bear market rally back to 14, 1500, right?
It could be, but this would be my short term or my target so far for this year. I really don't want to go and project out much more, but when I look at the monthly chart, and I like to look at all these different time frames, I mean, this level has been defended. I love the way that it took out the lows here just by a touch, and then it came right back up. Usually, we're going to see some kind of at least short term powerful move for maybe a quarter or two, and that should take us up to around the 140, possibly 145 on the GLD. Um, but ultimately, after that, I really like to see how the markets react before forecasting further.
Right.
But I would not be. 2013, I was bearish on gold. 2014, I am not at all.
Okay, so how does this translate into your view of the dollar?
Well, the dollar is pretty interesting. If I pull up a chart of the US dollar index right now, we should trade back down, but only to around 80. And ultimately, I'm just going to spread this out to a continuous contract. This way we could really get a good view. Um, this is going to be somewhat range bound. I ultimately think the dollar, for the most part, is going to move lower. And right now, believe it or not, a weaker dollar is not beneficial for the global stock market because the market wants to feed off of that yen trade and they want to feed off the yen short. So the dollar will have to strengthen in order for the stock markets to go higher. Ultimately, I expect the dollar to probably bottom out when it's all said and done around 75. The U.S. dollar index to bottom out around 75. I think this is ultimately where it's going when you look at the bigger scheme. If you go to a monthly chart, you're going to see that
Yeah,
this has had a real trouble of breaking higher. You got a series of lower tops, and
I
we're
like it.
probably going to go down. And look at this trend line
Yeah.
here. Boom, boom, boom. This is X marks the spot. This is pretty much where the dollar is ultimately going to wind
If
up.
we break
And I think
down out of that, then you're talking historic lows.
yeah, if we break down, but this level should hold. This level should hold in this year for
Okay, I
2014.
actually saw it
So, but
count back to almost retest the lows at 72, and then the deflation starts in earnest and the dollar rallies back up towards 100. Are you seeing that as a possibility that,
well, there there certainly is that possibility because this line right here, you see this rising trend line that I have
yeah,
drawn in. This line will notoriously be
right.
pierced. So sure, it could get down to 72, and I mean there'll be even more support there, and then there could be a big move on the U.S. dollar index. But when I calculate this out for potential upside from this level, and I have to do this um, a little bit prematurely and take some guesses, but I really only get to a level of 86, maybe 85, and that would be the top.
You mean after we go to the base or before we go to the base?
After we go back down to
Oh,
around 75
okay,
to 74,
okay,
then the next rally would only take this up to around 85, maybe
okay,
86.
because it almost looks like a triangle. If you draw a line off the,
Yeah, you
and
can
that's a
make a
big
case.
formation,
Yeah,
don't you think, Nick? We're talking about close to
it's huge.
16, 18 points, and tack that on top of 86, and you get plus
It's
100 if we break out.
it's huge.
Yeah,
Yeah, I mean, if you can break through here, then sky is the
right.
limit. I mean, this has
But in the
tremendous
meantime,
upside.
there's big money to be made on the short side of the dollar, the short
Yep.
side of yen, and the short side of the S&Ps, long side of gold. Your view on
Yep.
energy here? I'm thinking we're having a vicious bear market rally that may still have some legs in the crude. What's your work saying, buddy?
Yeah. When I punch up, I actually have my futures charts on my other platform, but I could use this here, and we'll get a good sense. Oil today is trading just down a little bit, only about 33 cents, so it's not a big deal. Right now, my near-term max upside for crude is only going to be right around 99, 75 to 100.
Okay.
I think that's where we'll stall out. If something big happens, crude can go back up to
That's
110.
what I'm
But
thinking.
I
What
really,
what what are you thinking might be that big thing? If what
believe it or not,
I mean, there are a lot of pots bubbling on the stove. Are we talking Iran?
yeah, well, I'm thinking China Japan conflict, and Iran jumps in and takes sides with China.
Okay, and
That's
is Gann pointing towards any time window? Is it this spring? Because I agree. I think
uh,
they're on a pre-war footing over the last several months. I think that they tested the U.S. out by putting up that air defense zone, and we complied by letting the Chinese know if our commercial aircraft were flying through the zone. There's almost been a collision between vessels out there. Abe's going to the World War II shrine. China wants to de-Americanize the Western financial system. They want the islands. Obviously, there's natural resources there. They even want the moon. So, is this the year where the King of the East flexes its muscles?
I think it is. I think it is, and we're starting to see glimpses of it already. The tensions between China and Japan, especially in the China South Sea, are really heating up. So it doesn't seem like there's a question of if. It just seems like a question of when.
I'm
So
with
I
you.
mean that ultimately could cause a spike in crude. Otherwise, I have crude penciled in to go back down to around $81, and
Okay.
you can see my line already in there.
Okay, interesting. And what's also interesting about uh, what could happen between China and Japan, I've seen historical analogs that describe this time in history being parallel to right before World War One. Have you seen anything like that?
Well, the funny thing, you bring up World War I. We're now 100 years. We're coming up to a 100-year anniversary cycle. So we always have to watch for 100. We always have to watch 100-year cycles. In fact, one of the ways I was able to predict the 2007 2008 crisis was using the 100-year cycle from the 1907 Knickerbocker panic.
Oh, great.
That ultimately was the cycle, um, or the event that allowed the Federal Reserve to come into power just 7 years later, in 19 end of
Well,
1913.
aren't
So,
we
and
at
that's a
their 100-year anniversary year right now?
yeah, yes, we are. We are at the Federal Reserve's 100-year anniversary. So I think we're going to see changes in the financial markets, changes in the way central banks conduct economic policy. Big changes are on the way. You ever heard of the 100-year flood? I think this is it, and we have a lot of 100-year anniversaries coming up, and
So, with some of the things that you're
it's
looking at, Nick, do you feel concerned about? We already have invisible bread lines here in the U.S. Are you concerned about social unrest and being here and getting caught
oh,
up in it here in the U.S.?
absolutely.
Have you
I
have you
think
scoured any
I
haven locations for you and your family to watch it on television instead of being in it?
well, the best thing I think most people could do, if social unrest does occur, and it has happened all over the world, the United States is one place where we really don't see it all that often, but um, I own some properties, and hopefully we can protect them, and hopefully we can stay safe. And I live on a piece of land that if I needed to be self sufficient, I guess I could be.
Wow.
I pray that I don't have to
Yeah.
be, um, but I could be.
What's your position on the fact? I think there was even a celebration with some new legislation that taxpayers, they're saying this, they're doing a favor to taxpayers that we will not be responsible for any financial institutions failing again. There cannot be another taxpayer bailout, but there is legislation that our deposits would be the bank's property. It's their money, not our money. And a bail in type situation in the U.S., similar to what happened in Cyprus and what's happened with the nationalization of pension plans in countries like Poland.
Well, I think Cyprus was the test study, and it looks like they got away with it. So if it can happen there, it can happen anywhere. There's nothing new under the sun. We're all susceptible, and we just look at past events. What has happened before will certainly happen again. So unfortunately, I always tell people, have a little bit of precious metal, have some precious metals available, and also have cash on hand. Make sure you keep some cash in a safe, or in a safe place in your home.
In a sock?
You
How
just
about a sock?
a sock might do the trick. Maybe a pot, put it in a pot, pan. I don't know,
So,
but you should have some
talking
cash
about
on
a
hand.
possible hostilities between China and Japan, that brings you back to the epicenter being Japan. And also, there's a lot of talk about the shadow banking system in China being in turmoil, and that, I've always said, we talk that our Fed is 100 years old, right? And
Yes.
we've made mistakes. We've been behind the curve, our Fed, several times, uh, uh, not really ahead of the curve. So there have been central banking errors here with the Fed. China's been in the central bank business, what, 10, 15, 20 years? So maybe the rookie can't handle
Yes.
the monster it created. What are you seeing for China?
Well, Uh, right now, the Chinese problems are tremendous. If you're living, basically you could compare the shadow banking system to the subprime
Right.
crisis. You're dealing with basically 1.3 billion people in a single country. Only 300 million have even reached, I guess, what we would call middle class status. The rest of the country is in poverty. So if you have the 300 million start to sink, just think what that does to the rest of the nation. So I think the problems are very severe in China. In fact, I'm going to pull up a chart of the Shanghai, and
Is
and
that the
I'm
FXI?
just going to show you.
Okay. Yeah.
I'm going to show you the Shanghai composite, and right now, I think ultimately, before it's all said and done, we go test 1500, possibly even 1450,
Yeah, it's
and that's
amazing.
that.
It's amazing when you think about it, how the U.S. is pressing, took out the highs that was the blow off top in China, and China's much closer to our crash lows from the low in 2008. They're
Yeah, you can see
they're
it right
already
there. I mean, and
retesting the crash lows here.
yes, yes. The positive for China is going to be after they go through this, they'll probably emerge stronger, and that could be a positive for them. But that's going to be a while off. That's going to be probably 4, 5, maybe 6 years away.
Okay, Nick. Anything you want to wrap it with that you're? I think we covered a lot of ground. Anything that I missed, being the incompetent interviewer that I am?
There's none better than you, Dale.
I wasn't fishing.
I think you covered it all. And what you're doing is something that's a great justice to the people. You're letting people know what the real deal is out there, regardless of the nonsense we hear out of government or central bankers and
Oh yeah,
all of these experimental
I
programs that are
play I
being
played Johnny
thrown at
Lang's
us.
song. You may want to check it out. It's called "Lie to Me." So yeah, I play that in a room. So Nick, it was a pleasure speaking to you again. How can people stay in touch with your exceptional top drawer work? And if they wanted to learn some of the techniques, would they go about it? You want to show your website or?
Sure, sure. They could just come on over to inthemoneystocks.com and just check out our free all of our free content. I mean, it really is pretty powerful, pretty amazing, and we give out a lot. We talk about a lot, and if anything, you'll learn something that you won't hear on CNBC or somewhere else. And here's our website for anybody that wants to look
You
at it.
mean you
So
mean you don't
um,
say booyah?
no, there's no booyah going on here. In fact, we kind of pride ourselves on telling people the actual truth, whether or not we're right or wrong on a trade. We're never going to be 100% correct, but
Right.
I will say though that for the most part we're going to be on the right side of the tape at the right time, and that's what trading's all about, putting the odds in your favor.
Nick, it was a pleasure. Thanks for giving me clarity on a lot of markets. Some ideas you confirmed for me. Certain markets you opened my eyes to looking at it differently that makes sense to me. So I learned from you today, my friend. I want to wish you and your family and all your associates a happy, prosperous, joyous 2014 with lots of pips and ticks on both sides of the market, my friend.
I appreciate that, Dale. God bless, and we'll talk soon.
Okay, my friend, take it easy.